Okay. So, we are, I don't know why, there we go. What you may have noticed in this unit is that I have two notes packages. So it's just because I want to highlight certain things and I want to make sure we talk about things thoroughly. And I have different resources. And because we're doing it online, it's just easier for me to kind of use these two resources. So there's going to be some overlap with what we've been talking about. Today we've been talking about banking. So just to, and some of this will be repetitious of what we did this morning, but if it didn't sink in this morning, then it's going to sink in now. And we're just going to do a little repetition. So we're talking a little bit about banking today, and many different types of accounts are available at banks and other financial institutions such as credit unions. A few examples of banks you can open an account at are, we have here in Alberta, we have ATB, we have CIBC, we have Scotiabank, and I'm not paid by any of these banks. We have TD. We also have a Service Credit Union. That's a credit union as opposed to a bank. And some of you may use a different bank. There's quite a few different kinds of banks available for us to use. Those are just a few of them. Now, when you deposit money at a financial institution, it may pay you interest. And that's when your money works works for you. My apologies. And it's basically interest is a percentage of the amount deposited. And in this unit, we're going to talk a little bit more about interest. The amount of interest depends on the type of account you have and the amount of money in it. So when you set up an account, not all bank accounts are created equal. Now, the two main types of bank accounts are checking and savings. Okay. A savings account is generally used to save money, and it can accumulate interest over time. Special type of savings account is a tax-free savings account. And we also refer to this as a TFSA, in which you don't have to pay taxes on the interest earned. Okay. And that can be a good thing, because if you have a lot of money and it's earning interest, you don't want to pay taxes on that just because it's been sitting there. That doesn't seem fair. Anyways, it's also, good economic sense, right, for you. A checking account usually allows more transactions and generally doesn't pay interest. This type of account is usually used for, managing your ongoing expenses. So, like paying bills, rent, food, etc. Okay. Banks charge fees for transactions such as deposits, cash withdrawals, and bill payments. Most banks will offer different types of accounts that entitle you to a certain number of transactions for a flat fee or minimum balance. So sometimes if you have a minimum balance of, say, $10,000 in your account, they won't charge you those fees because the bank is making money off of you on the interest. So let's look at some examples. Laura is studying fashion design at Kwantlen University in Vancouver, BC. She wants to open a new bank account and estimates that she will need to write 2 checks, pay 4 bills online, and uses her bank cards for about 20 transactions each month. So she writes 2 checks, 4 bills online, and she uses her bank card about 20 times. CIBC offers an everyday checking account for $3.90 a month, including 12 transactions plus $125 for each additional transaction. So that's one of their products. They also offer a smart account for $14 a month, which includes unlimited transactions. Transactions are defined by CIBC as debit purchases, CIBC withdrawals, including at the CIBC ATM. So it's important to note that if you go to other banks' ATMs and withdraw money, that you will have to pay a fee. Okay, so you always want to try and go to your own. I mean, sometimes you can't, but you'll get charged less or not at all if you use your own ATM. Interact e-transfer payment, transactions, transfers, checks, pre-authorized payments, and bill payments. Which is the better bank for Laura and why? Okay, so the everyday checking account has a fee of $3.90 a month. Okay, and that covers 12 of her transactions and plus $125 for each additional transaction. Well, she has 24 transactions. So that means that 12 of those are covered, but the other 12 she's going to pay $125 for. So 12 times $125 is $15. Okay, so the total she would pay using the everyday checking account is $3.90 plus $15. So that's $18.90 a month. Okay. With the smart account, she pays $14.95 flat rate. So I would say the better account, because of the number of transactions for Laura, is this one, which is her everyday. Oh, no, it is not the everyday. It is the smart account. My apologies, guys. The smart account. Okay, it's because she has enough transactions that this makes it worth it. Okay, so whereas this sounds more appealing, because she does 24 or 26 actually. Oops. So this should actually be, let's redo that. This should actually be 14. 14 times 1.25, which is 17.550 plus 390. So it's more than that. Wow. Lesson learned. 2140. Save that money. I mean, look at, she would save 2140 minus 1495. She would save $645 every month. Now you're saying, well, what's the big deal? Well, $645 every month times 12 equals $77.40 a year, right? Per year. So, save your money. That's what I always say. Now, using a bank card. Now, many of us have bank cards. We've been using it for a while. It's important to understand that there are obligations and there are fees and that sort of thing. Now, a bank card is a great convenience. It allows you to make purchases in stores that accept bank cards as payment, and most stores do now. With COVID, they actually don't want cash much anymore because of transfer. When you make a bank account purchase, the amount is deducted directly from your bank account. Some merchants will offer, isn't this nice? They will offer cash back, which allows you to withdraw cash from your account when you pay for your purchase. So sometimes you want to get a little extra cash to use for things, and you don't want to do 2 transactions by going to an Instabank as well. This will save you on transactions. Now, to use your bank card, you need a PIN, a personal identification number, and your PIN should be private. Don't tell anyone your PIN, not your friend, not your girlfriend, not your boyfriend, not your partner, not your mom. Well, I mean, you probably can trust your mom. Depends on your mom. And you don't want anybody else to have access to your account. Okay? It can also be used at an ATM to withdraw cash directly from your account. And at some ATMs, you can use your bank card to make deposits. So you can do withdrawals at ATMs, and you can make deposits. You can only make deposits at the bank that your card is from. Now, you can use ATMs from other banks, but those ATMs usually charge high fees, okay? In many cases, the fee for using an ATM may be included in your account package. However, your bank may charge a fee if you withdraw cash at an ATM operated by another financial institution. There could also be a service charge for the other financials. This means that you get double charged. When you go to another bank's ATM. So avoid it where you can. Okay, save your money, folks. Example 2. Sam is a high school student that has an everyday checking account with CIBC. The monthly fee is $3.90 a month, including 12 transactions, $125 for each additional transaction, and charges an additional $2 for non-CIBC ATM withdrawals. In January, Sam used his credit card once every day at Tim Hortons and withdrew money in a non-CIBC ATM 3 times with a service fee of $3. Calculate his monthly banking expenses. So he has the everyday checking account, so that's the $3.90 per month, right? And that includes 12 transactions. And then it's $125 for each additional. It charges an additional $2 for every non-CIBC ATM withdrawals. That's whether or not it's one of his 12 transactions. So in January, he used his debit card once every day at Tim Hortons and withdrew money from non-CIBC with a service fee of $3. So 30 days has September, April, June, and November. All the rest have 31. So if he used it at Tim Hortons 31 times, now he gets 12 transactions, so we can minus those 12. That's how many transactions above. So 31 minus 12 is 19 times. So 19, I don't know why I put a period there. I'm going to take that out. 19 times 1.25. Those are for his fees. Is 23.75, right? Now, he also has 3 non-CIBC ATM withdrawals with a service fee of $3. So he's going to pay this $125 as well for those, because those are transactions, right? And he's going to pay that service fee of $3. So that would be $9. So let's total that up, right? So $3.90 plus all of those, 3.9 plus 23.75 plus 3.75 plus 9. So look, Sam is paying $40.40 just to use his bank card because of how he's doing this. He would be better off. Here's a better plan. The better plan for Sam: buy has a U, buy a Tim's card that covers his monthly Tim's expenses. So whatever that is, like if he's going to Tim's every day, maybe it's getting a Tim's card with $100 on it, because then he can use that Tim card and not use his debit card, right? $100 to $200 depends on what he's buying. Like if he's just getting a coffee, he might be okay with $100, so that he's not doing those 31 transactions. And then withdrawing money, he should go to a CIBC ATM. My sister taught me this. She always, when she goes to like an Instabank in her month, she'll say, well, I actually just go once a month to take cash out. So she doesn't take $20 here, $20 there, $20 there. She would say, how much cash do I use in a month? I'll take that out. And then she would store some at home. But because it's one transaction, she would reduce the number of transactions and she would save money. Okay? So now you got some practice questions. You're going to take a look at some of these accounts informations, and you're going to use those to answer the questions. So really get you thinking about bank accounts and the products that are there, because these are products that are being sold to you. And just like when you buy your cell phone, you buy a different data package, that sort of thing. You have to think about how you're going to use your account to decide what is the best package for you. Not all bank accounts are created equally. So then you're going to answer some questions, and you're going to talk about PIN numbers. Very important to keep secure. Even if you think you can trust someone, you probably can't trust someone. You shouldn't. Okay? Because what if someone shakes them down for the number, right? Okay? So just answer some questions, and then next we're going to talk about some other things.